This is Paul Nunemacher, and we're at the Connecticut Economic Resource Center, and we thank you for participating in this webinar this morning. As I mentioned earlier, we've had a tremendous response to this, and we're looking forward to bringing everybody up to date on what's been going on, letting everybody know what we expect may be happening in the next several months, and answering your questions. Speaking of which, we'll be taking questions at the end of the presentation. We'll be emailing you meeting materials after the program this morning, and I expect in the next couple of days or two the full webinar, including recording of the audio synced to the presentation, will be available. Here in the room at CRRA this morning is Don Stein, our chairman, Dick Barlow, our vice chairman, Ralph Eno, who is another member of our board, and from management we have Tom Kirk, our president, who will be the main presenter this morning. You'll be hearing from him in just a second. Peter Egan is our Director of Environmental Affairs and Operations. Laurie Hunt is our Director of Legal Affairs. And Mark Daly is our CFO. I'm going to introduce briefly Christy Sullivan from CRRA just to give you a quick idea of how the technical aspects of this will work this morning, and then we'll turn it over to Tom Kirk and get started.
Just to let everybody know, this is again being recorded, and the way that we will work this GoToMeeting tool is that there's an opportunity, Paul has said, at the end of the presentation for questions and answers, and there's a little hand that you should see on your GoToMeeting screen. You just want to click that hand when we get to the Q&A if you have a question, and we will unmute you so that you can your question can be heard live on the phone, and then we will go to the next person, so it'll be a one at a time and just one person, so that you don't hear other feedback. If we open the phone lines to everybody, it would probably be a lot of feedback. Thanks.
Hey, good morning, everyone. My name is Tom Kirk, President of the CRRA. Thank you for joining us today. We're hoping this medium of communicating with our customers works for us. We'd appreciate your insights and comments on that at your convenience. We did mention we'd like to answer all of your questions. It's best if you wait till the end of the presentation, but please, if necessary, interrupt us. We do want to answer all your questions, and we'll get to them all. I expect this whole presentation should go no more than a half hour to 40 minutes. Let's start first with our agenda. We're looking at four major areas. The transition plan we'll talk about in some detail. Next steps for the CRRA and our customer towns. Some legislative actions that we anticipate or hope to support. And essentially a request for your comments, helps, and ideas on helping us better communicate and keep our customer towns informed and engaged. Our transition plan is a document and a plan developed at significant effort by CRRA, and was required as a result of Public Act 13285. That Public Act required the CRRA specifically to devise a transition plan which will provide for the dissolution of CRRA or the development of a sustainable business model. Last year, in the close of the legislative session, a bill, which was a delete all bill we're familiar with, included some substantial legislation requiring three things. This bill, which became Public Act 13285, had three key positions. We're on slide 7 right now. The key provisions of those were an audit by CRRA, supervised by DEEP and OPM, and paid for by CRRA. DEEP and OPM selected Cohn-Resnick for the audit. The costs were up to $500,000. About $460,000 has been spent to date. The second provision of the Public Act was for the creation of a resources recovery task force managed and administered by DEEP. That task force has completed its work and submitted its report. It's available online at the DEEP website. And third, and what we'll focus on mostly today, is our transition plan developed for and paid for by CRRA. All of the reports have been completed and submitted. They're all available. If you have trouble finding any, go to our website. Our report is there and available for you. And the DEEP report is also available. A budget implementer bill also passed last year required the CRRA to transfer up to $35 million of cash to OPM, and in return, OPM would require, or the legislature would require, DEEP and CRRA to agree to the state undertaking the liabilities, management, and administration of 5 landfills in future years. We'll talk a little bit about that later. That was a budget implementer bill that we will discuss somewhat today. Moving on to the CRRA transition plan. To develop the plan, CRRA did most of the work in-house, but did engage a number of consultants to help us complete our work in the most comprehensive and effective manner. And we looked at just about everything CRRA does in the solid waste and industry and power industry. The solid waste disposal market, the solid waste supply and demand, both public and private, power markets, both regional and local. We looked at energy, renewables, capacity, all power products, demand response, everything we could expect to affect the power and the power supply, the power demand, and the power price in future years. We also looked and dusted off some prior studies of new and emerging technologies so we could better understand what potential supplemental or replacement technologies could provide for our customers. We focused, we found anaerobic digestion of the organic portion of our waste continues to be a priority and probably closest to economically viable. But we also looked at some other technologies that are on the horizon. We looked extensively at the financial assets and the physical assets of CRRA, both as potential sale and as potential alternative uses. And we finally looked at alternative CRRA configurations, essentially various business models that would essentially toss out the existing business model and consider a different way of operating CRRA to provide the disposal services that the towns and residents of Connecticut require. Moving on to the next slide, slide number 9. The transition plan came to some pretty definitive conclusions. Some key ones include the price of power has dropped dramatically. We'll show a chart in a couple of moments here to demonstrate that, to illustrate that actual change. But these lower power prices impact the future viability of all 6 of Connecticut trash energy plants. It's not just a CRRA issue, although CRRA is substantially impacted by the drop in power prices. A second key consideration is the environmental superiority, if you will, of the method and system CRRA and the state of Connecticut has developed here. CRRA is the most successful state in the union, and is successful on terms with Denmark and Holland and some of the other very environmentally conscious European nation states. And that's because of 30 years ago, the state made a very, I would argue, wise decision to pursue trash to energy to replace its numerous town dumps and landfills. That decision was appropriate and worked at the time. One of the key considerations of our transition plan is to look at that system now and see if there's a way we can do better and what the new technology or the new system should be to serve Connecticut moving forward. Identical conclusions were also reached by the task force, so we have both the Resource Recovery Task Force and CRRA's transition plan finding that the superiority of trash to energy and for the state is something worthwhile, and that the power prices are putting that system at risk. We're now on slide 9. Our critical conclusions continuing. Low power prices do impact and potentially put at risk the viability of all trash to energy plants. For years, the trash to energy industry relied on long-term avoided cost power contracts, which are and were essentially a subsidy to operations. Those are or will shortly be expiring, and the plants will operate in a market which is seeing significant volatility of late in power pricing and energy pricing. Whoops. Bear with us a moment here. We're having a little trouble advancing the slide. Here we go. Continuing on our critical conclusions, we did look, as I mentioned, at the sale of the facilities. Is there a way to sell the facility either to a private operator or a developer that would work for the advantage of the state? Our conclusion was quite obvious. The purchase, for the purchase to be attractive to a private party to operate the facility, we would need substantially higher tipping fees. Another way of saying that the market is not ripe for a private operator to operate this facility at a profit. Additionally, closing the plant would have very dramatic impacts. We would expect much more waste exporting and landfilling out of state, and that would also result in higher costs for municipalities, residents, and other businesses across the state. Slide number 11, future power prices are forecast to rise above the low prices that we saw in 11 and 12, thus improving revenue. This is a key finding and a key conclusion that works beneficially for all of our town customers. Our consultant, CRRA Associate, forecast for the specific use of the transition plan power prices based on a number of factors. Some of those include the prices of power and fuels across the region, generation capacity constraints, transmission congestion, electric transmission congestion, fuel transmission congestion for natural gas, because natural gas is a critical driver of power pricing in New England and has been increasingly in the last decade. New generation capacity, scheduled retirement of existing capacity. All of those factors and a number of others were considered by CRRA in trying to get a very comprehensive evaluation and forecast of power prices looking forward. And we're as confident as we can be that we're as done as good a job of forecasting as we can. But keep in mind that forecasting is an art, not a science, and that no one predicted the significant drop in prices that you see in front of you on slide number 12 back in 2009. So we accept and count on and rely on, essentially, our forecast moving forward. but also understand that it is truly a forecast and that the power market remains volatile. This chart is very indicative. It shows and very illustrative of what's happened in the market in the past, and it also shows what we anticipate, what our consultants' consensus moving forward is on power prices moving forward. And it is that forecast that we've utilized in our transition plan to create a 10-year plan for continued services by CRRA. Note also on the plan is a audit assumption by Cohn-Resnick. When the Cohn-Resnick audit report was first published, there was a shortfall of power revenue identified, which was quite significant. And one of the reasons it's significant is the assumption of power pricing. And you can see that short two-year line, Cohn-Resnick audit assumption, indicates a power price of a little over 3.5 cents. Essentially, what Cohn-Resnick did was assume the low price of 2012 and advance that with a escalation, a COLA-type escalation over 2 years. A more thorough and comprehensive forecast, which examined a host of different drivers for power prices, was performed by CRRA, and that is the 10-year forecast you see in the red line above it from 2014 through 2024. Continuing with our critical conclusions from the transition plan, you'll find that our plan examines a number of different technologies, but our conclusion is essentially unchanged from the prior evaluations we have done in past years. The next generation disposal technology is not, many of the technologies are not quite ready for prime time. With the exception of organic anaerobic digestion and some other composting capabilities and technologies, many of the exciting and potentially business-changing, industry-evolving technologies are just not ready. And what that means is there are not commercial plants available to examine and test, that they're at laboratory stage, or the financial costs of a system do not meet the expected market return, meaning that you just can't provide these services at a $60 to $100 tip fee level that is typical across the states. So with that understanding that disposal technology, with the exception of supplemental technologies like anaerobic digestion, with those technologies not available in the immediate future, the CRRA is focused on a more sustainable business model to preserve the viability of the South Meadows facility and the 700+ thousand tons of capacity, disposal capacity it represents. It's focused on maintaining those environmentally superior services of trash to energy on which the state and its municipalities depend. And while doing that, working with the state to implement the next generation strategy for large-scale disposal or elimination of our waste and the technologies that would be necessary for this. So to encapsulate those comments in a sentence or two, the board looked at alternatives to continuing to run trash to energy as the primary means of dealing with our waste, and found that the disposal technologies are not mature enough to be able to step up to that big task of dealing with over 2 million tons of garbage. However, we recognize that those technologies are close, and we need to monitor them and implement them when they're ready, and we intend to work with the state closely to do that. CRRA's critical conclusion of the transition plan is that we do have the capability of continuing to operate, and that means that continuing to operate the foundation of the CRRA disposal menu, the Mid-Con facility, the old Mid-Con facility, which we now call South Meadows. We have the capability of continuing to operate that for at least 10 years, and that's with the assumption that we would not trigger the opt-out provisions that are associated with municipal services agreements that many towns across the state have signed. Assumed in this 10-year plan is a recovery of the power prices as we forecast in a previous slide. That's not an aggressive assumption. We believe that's conservative, although keep in mind it is a forecast. We are utilizing additional, continuing to utilize, as we have this past year, CRA income that has traditionally not been utilized for disposal. Specifically, most of that revenues come from leases of CRA assets and the generation, energy, and capacity revenue associated with our jet peaking generators located in the South Meadows. We do have at our disposal a potential disposition or monetization of some assets, additional cost reductions, and the use of CRA bonding authority to flatten the impact of the extraordinary capital expenditures. The two of particular note are the turbine overhauls that will be required if the plant is to continue to operate. And those overhauls are substantial investments, and they'd be due in fiscal 15 and fiscal 16. Our bonding authority is essentially borrowing money and paying it back through our revenues over the course of 10 years. It's not depending on the state bonding commission for any revenues. This is a plan, a transition plan that continues CRRA's self-sustaining viability moving forward. One of the items mentioned in the Cohn-Resnick review and audit was staffing and compensation. Here's a graph of our staffing and our staffing levels over the past few years. You can see that we are adjusting downward, and that is, as expected, associated with the expiration of some projects, retirements of the bonds associated with those projects, reductions in some programs, changes in customers, a movement from many municipal customers to a few less municipal customers and more private customers, and importantly, the delegation of many functions to contractors. This has been occurring for the last few years and has been fairly successful, as you can see from the chart. However, the board has, in the 10-year transition plan, assumed a salary freeze for 5 years and has commissioned a comprehensive compensation study of the CRRA. We have done those in the past, the most recent in 2010, but we've done them a couple times in the past, and I think the board is determined to assure that the authority is operated effectively and economically and appropriately as it provides those at-cost services to the municipalities and private haulers across the state. The CRRA board will also be considering the evaluation of the functional services of CRRA, essentially look at all we do, what can be done differently, what can be eliminated from our functions, tasks, and responsibilities, and the staffing associated with any changes. And the CRRA board intends to take any actions, appropriate actions, associated with both studies effective fiscal 15 and July 1. The transition plan moving forward does provide continuation of services. It maintains the commitment of CRRA, the state, and the participating municipalities to the state system of trash to energy, renewable energy, reduce, reuse, recover the energy from what's left from that pre-cycled waste. But it does not have the revenue associated with maintaining a continued advancement of the solid waste management plan. The statutory responsibility of the CRRA to implement the solid waste management plan is minimally being met by maintaining the trash to energy system, but continuing to push the envelope forward in renewable energy development, C&D and residue disposal development, post-generator recycling, new technology applications, etc. Those opportunities are not funded or not funded sufficiently in the 10-year transition plan. And the reason for that is quite simple. The revenues associated with the power market and the market for disposal services are such that it just does not support maintaining the continued operation of the facility while still doing these important tasks to advance the solid waste management plan. There are opportunities for increased revenue moving forward, and CRRA can provide some of those additional services if that revenue becomes available. There are two major opportunities for that. One is a higher price for the power generated over the next 10 years by CRRA. Our transition plan forecast, recall from the CRRA Associates, is conservative, but pricing is volatile, and unless there is a substantial favorable variance with, and we would hope for a substantial favorable variance with power prices moving forward to generate this increased revenue to provide those statutory services we'd like to provide. Also, additional revenue from enhanced renewable energy credits. Most of you are familiar with this concept. We've been talking about it for years. It would require legislative action. We'll talk a bit about it in a few minutes as well. The landfill transfer, recall earlier in the presentation I talked about a budget implementer bill that required a transfer of up to $35 million to OPM, and with that the transfer of legal responsibilities for the 5 landfills to DEEP. The board's position at this point is that the full responsibility and liability of the landfills, the 5 landfills owned and or operated by CRRA, which include the Hartford landfill, the Wallingford landfill, Shelton landfill, Waterbury landfill, and Ellington landfill. The entire liability, ownership, costs, and responsibilities associated with those 5 landfills would need to be transferred along with our $35 million, or up to $35 million, to properly protect both CRRA and the host communities and prior customers, municipalities of CRRA. The cash for this $35 million, up to $35 million transfer will be from the post-closure care funds, the reserves put aside by CRRA and paid for previously by tip fees to ensure the post-closure monitoring and maintenance of these landfills. So the money is there. There'll be no tip fee impact. Minimal impact to disposal recycling operations are anticipated, and by minimal, we expect it to be extraordinarily small. Essentially, the loss of the ability to spread some of the overhead costs of CRRA onto the about $2 million a year costs of monitoring and maintaining those landfills. DEP and CRRA are presently developing, as per the statutory language, a memorandum of understanding to effect the transfer of both the cash and the responsibilities and liabilities to ensure the protections for the towns. And those protections are required as part of the MSAs that towns have signed now with CRRA or have signed in the past. And we expect all of this to happen in the next couple of months, but certainly before the end of the fiscal year. In the next few months, CRRA will set the CSWS, that's the South Meadows disposal fee. We're obligated to do that and committed to do it by February 28th so that each town can have a firm number to pencil in to its general fund budget. The CRRA board will make a decision on recycling rebates. There was no recycling rebate paid yet for fiscal 13. Fiscal 14 rebate, if considered, would likely be considered by the board sometime after the end of the fiscal 14 year. I will note that our recycling rate for the entire state is not growing appreciably, if at all. CRRA towns continue to lead the state with recycling rate increases. As a state, CRRA does better than the numbers would imply, but nonetheless, there's plenty of room for improvement. I'd invite any of you to tour our facilities, and you could see for yourself that there is quite a bit of recyclable trash still commanding $60+ a ton across the scale. It shouldn't be. We expect to complete the MOU for the transfer of responsibilities and cash to the DEP and OPM, respectively, in the next couple of months. The Southwest towns CRRA contracts, the Bridgeport area towns, will be expiring in June. We hope to be able to provide some options for those towns for fiscal year 15. The Southeast towns will be setting with CRRA the fiscal 15 disposal fee this month. And our Tier 1 CSWS, South Meadows, will set its tip fee to its net cost of operation and communicate that tip fee to the towns by February 28th. CRRA's disposal fees, particularly for the South Meadows facility, our objective is to not exceed the opt-out ceiling written into your MSA. We expect to be able to do that. Tiers 2 and 3 do not have an opt-out position. The Tier 1 opt-out is $64 for the base tipping fee. Recall that if you are a long-term customer, a 15-year MSA participant, you receive a $2 discount from that base tipping fee. So your opt-out number base fee would be $62. The long-term, don't want to repeat myself there. Trash to energy system continues to operate moving forward. However, it would receive a very substantial boost if it were able to treat its energy much the way other renewable energy generators are treated. Trash to energy is the only major power source that mitigates, actually reduces greenhouse gases in the atmosphere. Environmentally, it's a big plus for Connecticut and for the country. Enhanced RECs, renewable energy credits, would be valued closer to the value of wind, solar, and hydro and landfill gas generators, and would be very valuable to our industry. We hope to get that enacted last year. The bill died in committee, unfortunately. The towns were overwhelmingly in favor, but the environmental community was opposed. We would anticipate that a 3-cent per kilowatt REC, renewable energy credit, would mean about $11 million more revenue for CRRA through the Hartford Trash to Energy Plan. That's about 50% more, half again as much as the revenue of the entire facility for the year. With that additional revenue, we could allow for a reduction in disposal fees, helping each town's budget moving forward, and have the additional effect of establishing a lower ceiling on prices. I think most of you understand that when CRRA submits its price to its towns, our competitors tend to come in 50 cents or $1 below that. So we would have the effect of lowering statewide disposal prices for towns and communities across the state. And importantly, it would provide needed and necessary funds for developing the next generation of systems to deal with our waste and ensuring the implementation, the full implementation and advancement of the solid waste management plan. Enhanced renewable energy credits. The difference between a renewable energy credit and what we're proposing as an enhanced renewable energy credit is a discount. We would not ask for and would frankly likely never receive a full renewable Class 1 renewable energy credit for trash energy power. But some portion of that makes sense, and we are awaiting consideration by the DEEP, specifically through its Resources Recovery Task Force recommendations, in the hopes that they will push for legislation enacting an enhanced renewable energy credit for trash to energy. We expect that if this recommendation comes forward, we'll be working very hard to ensure the legislators across the state are well informed on the importance of this and the benefits for the towns and the residents, and we'll be asking for your help in that effort. And we're coming close to the end here. In terms of improved communications, we would likely, moving forward, like to renew our quarterly customer meetings. Depending on the success of this particular technology, this venue, this webinar, we may opt to utilize the webinar model moving forward, but we are committed to try and maintain the most effective means of communicating with our customers moving forward. I also want to renew our availability to attend, to participate, or be present at any of your meetings, boards of selectmen, town councils, other municipal bodies, and councils of governments across the state. We're happy to have the opportunity to either address you or be available for questions at all of those meetings. And of course, I'm always available, as are any of our management team, available to meet with you directly with any issues you have with our services, or for any reason regarding trash to energy and waste disposal and recycling in the state. I encourage you to make use of our website. There's a host of information on there. If I have a complaint, with the website there's so much information there, it's quite often difficult to find what you're looking for. But if you do have an opportunity, please take a look at the site. Give us a call if you're having trouble finding something. We'll be able to help you. Okay, if you've managed to stay awake through that, your next opportunity is for questions. I remind you here that we have a number of the directors of the CRRA with us, and as well as some management members, our CFO and myself, Director of Operations, Legal Counsel, Paul. We're all happy to answer anything we can or find the answer for you if we can.
So again, if anyone has questions, there's a little hand tool that you can click on the GoToMeeting toolbox, and you can just press that and your hand will be raised. If you're not accessing that for some reason, you can also write in or type in a question. That's another option. If you would prefer to just, rather than speak, you can just type it in the questions box as well.
No need to raise your hand if you need to use the facilities. You can just get a hall pass.
So, Bob.
Okay, Bob, you're first. Fire away.
Can you hear me?
Yes.
Just a quick question. The agreement through the Public Act up to $35 million, what determines that amount?
The question, in case to ensure we all heard it, is has to do with the transfer of up to $35 million to the OPM for liabilities and post-closure operations of the landfills. The question was, what determines that actual amount? And I'm not certain, Bob. It is expected that would be addressed in the MOU. The amount anticipated is likely, and this is my guess, likely to be the balance in our reserve account for those landfills, which is declining with the routine expenses of monitoring and maintenance. Right now, the amount is just under $35 million, and it declines at the rate of about $2 million a year, but at varying amounts through the year due to seasonal and regulatory issues. So my anticipation is that the expectation or the request or demand, depending on how you look at it, will be for the balance of our reserve amount, which is already under $35 million. I hope that answers your question. I may be able to give you a firm answer with the conclusion of the MOU, which I expect to happen before the end of the month.
No, I think that answers the question. I was just curious whether there would be any residual dollars. It sounds like there will not be.
That's a pretty good estimate. We don't expect there to be any residual dollars now. There is, and frankly, that is an issue I expect the towns to be concerned about, because if the reserve were to be overfunded, we would have an obligation to return those funds back to the towns. However, with the assumption of the responsibility for the landfill and all the liabilities associated with it, that opportunity for any refunds would be gone. Any other questions?
Oh, there's Ed Moen. Ed, fire away. Ed?
He's self-muted.
Oh. Ed, you need to unmute your telephone.
We're showing on our screen here
Okay, Ed, are you there? Ed Moen, are you there?
Oh, he's down. They need to.
We are showing that Ed Moen has a question, and we're having trouble connecting to him. Ed, you can type it in if that works better for you, and I'd welcome any other questions while we're trying to straighten that out.
Is he connected to the voice part of this also?
Appears he's muted.
Says he's muted.
Yeah, Ed, our screen is indicating that you're muted locally until you enter the PIN.
Okay, we've got a question from Sheila Balmer from Naugatuck.
Okay, the question, I hope you all can see it, is can you give us an update on the MDC lawsuit? Yes, Sheila, I'd be happy to do that. There has not been much new development of late. We do have some dates we can provide you. We expect the MDC arbitration to begin its hearings in March. I should back up a bit for the sake of the audience. The MDC was the prior contractor that operated the WPF portion of the MidCon project. At the end of the project and the beginning of the CSWS system, a new contractor was brought in, NAES, and our accounts with MDC were settled. At that time, actually shortly before the end of the project, MDC alleged that we owe them a substantial amount of money, up to about $60 million, primarily for costs associated with employees' retirement and post-retirement medical, post-retirement benefits. The contract calls for those claims to be arbitrated through an arbitration panel. The panel has been chosen. It took a couple of years to decide on the three panel arbitrators, but that has finally been accomplished. And the panel will be sitting down and hearing testimony in March. I can't get into many of the details, but suffice to say that CRRA is comfortable with our approach moving forward, and we look forward to a positive outcome from the arbitration. There's not a whole lot more to tell you than that, other than the scope of the arbitration in March is limited to liability for these costs and not the quantification of the costs. That in the event CRRA is found liable for anything, there will be a subsequent arbitration to determine the amount. Our hope is that the arbitration will be short and will be found to be not liable for anything, and that'll be the end of it. I hope that answers your question as best. It's pretty much the best we can do at this time.
Ed has a question. We can unmute him. Try to unmute him again.
Okay, the question from Ed Moan was he was predisposed earlier and would like a brief recap. And I'll offer a couple of things. One is I can provide all of you, and we'll send out the PowerPoint moving forward. Ed, I encourage you to give me a call at your convenience. But a recap is that our transition plan has provides for about a 10-year minimum plan moving forward without exceeding the anticipated tonnage opt-out caps. That does not include the important work that CRRA needs to do on advancing the solid waste management plan, but maintains the present implementation of the trash energy portion of the solid waste management plan. We hope for renewable energy credit revenues to allow us to complete our job and fulfill the full responsibilities of CRRA. Those additional revenues could also be found if there is a significant rebound in the power price moving forward. There is a consensus among the experts at CRRA, our consultants, the DEEP and the DEEP task force moving forward, that the trash energy system serves Connecticut well, but is ripe for replacement by a better technology, and we want to be positioned to be able to exploit that opportunity moving forward. I guess that's a good 60-second recap, and I'd encourage you to give me a call later today, and we can get into it as deeply as you'd like.
Hey, Ed, this is Paul Nonemacher, and we expect that we'll have the presentation and the audio available online in the next day or two, if that'll help you also.
Ed, we tried unmuting you, so you can go ahead and talk if you're there.
Okay, do we have any other questions?
Let's see.
Thank you, Ed. We got your note.
We'll have the materials out to everybody.
All right, that looks good. I'm kind of surprised I was able to get away with just a few questions. I appreciate all of your attending today. I would encourage you to give some thought to this mechanism of CRRA reporting to its customer towns. If you like it, don't hesitate to let us know. If it did not work for you, that's probably even more important for us to know. But based on our participation rate today, the number of folks attending a CRRA update is about as high as it's ever been, so we're encouraged by that. I'd just like to ask any of our directors if they wanted to add anything today. Chairman Don?
Just thank everybody for taking the time to dial in, and please ask questions if there's any issues we didn't cover. Tom, me, the staff, thank you all for participating.
Okay, thank you very much, everyone. Have a good day.